Today, we're going to dive into the hottest housing region in the country. The Sunbelt region of the US has been the darling of the US housing market for several years now, and that's with really good reason. The region just has very strong economic fundamentals pretty much across the board. A ton of people are moving to the area, and the economic growth leads the country in terms of regions. And these indicators, among several others, have led real estate investors to flock to the Sunbelt seeking appreciation and rent growth. But as experienced investors know, housing is regional. So even within a hot region like the Sunbelt, some markets are performing well, others are lagging behind national averages. You don't want to just take for face value that the Sunbelt is the best place to invest. It's why we're making this video, so you can see how some markets are doing well while others are not. In addition to me sharing some markets that I like, some markets that I would avoid, I also have some free data that you can all download about the Sunbelt, and I will put a link in that below. You can check that out in the show description, or just go to BiggerPockets.com and get data about every Sunbelt market completely for free. Before we do the analysis of specific markets, I should also probably mention that I was kind of surprised by this, but there's actually no commonly accepted definition of the Sunbelt. So I should clarify that for our purposes, we've included Tennessee, North Carolina, South Carolina, Georgia, Florida, Alabama, Louisiana, Arkansas, Mississippi, Texas, New Mexico, and Arizona. A lot of hot states in our data evaluation today. There are some people who actually include states like California or Oklahoma or Virginia, but honestly, I made a judgment call based entirely on my own personal association of what I feel like is in the Sunbelt, because everyone has a different definition. So those states that I mentioned before are the ones that we're talking about today. According to the census, many of the fastest growing states in terms of population are in the Sunbelt. From July 2022 to July 2023, which is the last data that we have from the census on population growth, the 7 states seeing the biggest population growth were all in the Sunbelt. So they basically swept the top 7 in terms of where people are moving and seeing population grow the fastest. That's like total absolute numbers, but if you look in proportional growth, like what percentage they're growing by, the Sunbelt still takes the top 3 spots, with South Carolina being number 1, followed by Florida and Texas, and 6 of the top 10. So really, no matter which way you slice it, the Sunbelt is really growing quickly in terms of population. In addition to population growth, you are also seeing strong economic growth in the region. And these things are sometimes correlated. You often see strong economic growth where there is strong population growth, and also people tend to move to where there is strong economic growth. So they sort of create this virtuous cycle, and that is happening in the Sunbelt. According to the U.S. News and World Report, 3 of the top 5 states for economic growth also fall in the Sunbelt. Those are Tennessee, Florida, and Arizona. But it is important to note that the things that I just talked about were on a state level and on a regional level. And as I mentioned earlier, it really comes down to specific markets and even specific neighborhoods that you want to consider investing in. So just as an example, actually, some of the biggest corrections where prices are declining are also in the Sunbelt. So for example, New Orleans has dropped 7% year over year, which I think might be the biggest drop in the whole country. Austin, in terms of bigger cities, sort of more high profile cities, is also facing one of the worst price corrections in the US at above 5%. And you also see other popular places from the last few years to invest or to move to, like San Antonio or Killeen in Texas, the Villages or Punta Gorda in Florida. They are also seeing declines in housing prices. So those are things you want to pay attention to. Also, just because a state is growing does not mean that each individual city in that state is growing. You see, big cities in the area like Memphis are actually declining, and some smaller ones like Pine Bluff, Arkansas, or Shreveport, Jackson, Mobile, they're all actually shrinking. And so it's really important when you're looking at markets and you're evaluating, say, maybe even if you know you want to invest in the Sunbelt, you got to check out the individual markets, because as you can see, some are doing well and some are not doing well. And again, if you want to see this all for yourself, this is all in the free download. We have population data in there. We have income data, rent growth, price appreciation. So it's really easy to filter and show what's going on. If you want to get a sense of what this free data looks like, I'll just put it up on the screen right here. And you can see that we have a couple hundred, it's 143 different markets here in the states that we analyze. And you can sort by all sorts of really interesting data sets here. So like we have unemployment rates, population, change in population, household income, median rents, we have price growth, and then the rent to price ratio, which is a great proxy for how easily you can find cash flow in a given market. So as you can see, if you're interested in investing in the Sunbelt region, you should download this data set. It's going to be super helpful to you in identifying a specific market. And again, it's entirely free. So as you can see, some of these markets aren't doing as well. And again, this is why you want to check out the spreadsheet that I showed you before, because you can see which markets are declining, which ones are growing. If you want to just hear about 5 markets that I like from doing this analysis, I will share 5 top markets in the Sunbelt with you right now. The first market that stood out to me is Tuscaloosa, Alabama. I believe this is the home of the University of Alabama. It's a relatively small city. I think it's over 100,000, but not some mega cities. And actually, that's going to be a theme of the 5 markets here, is most of these markets here are between 100 and 200,000. I don't know if that's necessarily causal, but it is an interesting pattern to take note of. The things I like about Tuscaloosa are, first and foremost, it is a really strong rent to price ratio at 0.74, which is close to the top of our entire list in terms of rent to price ratios in the Sunbelt, but it's also just shows sort of universal strength. And again, that's going to be a theme between my 5 markets, things that are pretty strong, fundamentally sound across the board. Prices last year grew in Tuscaloosa 1.5%, which is not amazing. It's less than the national average, but it's still good. It's nice to know that prices were still going up when some markets are seeing declines. Rent grew 5% last year, but one of the things that I really think is incredible is that their population grew 4% annually. Just for context, the population in the US last year grew about 1%. So this is 4 times the national average, and yet they have still maintained an unemployment rate of 3.2%, well below the US average as well. Tuscaloosa remains a very affordable city too, relatively speaking, with a median home price of $210,000, which is just about exactly half of the national median average. So if you're looking for a market to get into and you can't afford certain, the national median, this could be a place to consider. The second city that I liked from my analysis here is Hinesville, Georgia. It is growing insanely fast. This is 10% in the last year. Again, national average is 1%, so this is 10x the national average population growth. It still has a strong rent to price ratio at 0.65%. The one thing that you should note about Hinesville is that rent did grow at 2%, which is close to the historical average, but it is lower than the national average for last year. That doesn't make it bad. It is just something that you should consider. Hinesville, again, this is probably going to be most of the markets today, are relatively affordable. It's a bit more expensive than Tuscaloosa, but the median home price in Hinesville is $234,000. The third market that stood out to me is Fayetteville, Arkansas. It is the most expensive on my list. The median home price there is $330,000, so that's considerably more than the first 2 markets, but again, still lower than the national average, which is very appealing. And this is a really good market, and it has, I think, personally, has strong prospects for appreciation. In fact, prices went up 5% year over year, and rent growth went up about 3%. Population growth, another thing that we want to be paying attention to, grew 3%, which is really great. But what stands out to me at Fayetteville is really about the economy, as reflected by their unemployment rate at 2.9%. But Fayetteville and a lot of places in Arkansas are just seeing huge amounts of job growth. And I think that's why they're seeing such good population growth. That's why they're seeing good home price appreciation. And honestly, from the things I've seen, and I'm not an expert in the region, I've sort of looked at this at more of a quantitative data level. I'm not, boots on the ground in this area. But from what I've heard and seen, it seems like it's continuing. So that's why I like this market. But with it being expensive, it is the hardest market to find cash flow of my 5, with a rent to price ratio of just 0.5. Still means it's possible, but it's definitely going to be harder to find cash flow in Fayetteville than the other 2 markets that I mentioned already, and the 2 that I am about to mention. Which brings me to our 4th market, which is Wichita Falls, Texas. Now, I think there's a Wichita Falls. I know there's a Wichita Falls in Kansas, but Wichita Falls also in Texas. It's actually kind of a big market. It's over 100,000 people, so it's a decent sized city, and it's very affordable with a median home price of $159,000. Now, I know not everyone can afford $159,000, but compared to the other markets that we're talking about and the national average, this is a relatively affordable housing market that still has really good cash flow prospects because the rent to price ratio is at 0.72%. My only concern really about Wichita Falls is that its population growth is close to flat. It grew 0.2% last year, which is fine. Like certain markets decline. A lot of markets in the Midwest or the Northeast decline. So it's good that it was still growing, but it is growing a lot less fast than the national average and the regional average for sure. The unemployment rate is at 4%, which if we were like in any other time in the last 10 or 20 years, you'd be like, oh my God, the unemployment rate's 4%. That's an amazing stat. But right now, the national average is actually 3.8%, so it's a little bit higher. I'm not super concerned about that, but it is something I just want to bring to your attention if you're going to look into this market. So that's Wichita Falls, and our last market today is Goldsboro, North Carolina. It is the most affordable market on my list at $156,000. Price growth was huge last year at 7%. But it shares some of my concerns with Wichita about population because it just grew slightly. But the great thing about Goldsboro is it has the best cash flow on the list at 0.77% rent to price ratio, which is really good. It means that the probability of you being able to find a deal that cash flows positively, even with today's rates, is probably pretty good. Not everything's going to cash flow, but it increases your odds the higher the rent to price ratio is. And this is a high rent to price ratio. And rent growth was also huge at 7% last year. So I think there's a lot of things to like about Goldsboro. With all of these markets, they're just suggestions. I'm looking at these as a data macro level. If you're going to make an investment, you need to do the work. You need to go in and see if these markets, first and foremost, align with your personal investing strategy, your investing hypotheses, and you should validate every single thing that I am saying on this video. I really do my best and take a lot of pride in accurate data analysis, but you should not just take someone on the internet's word for it. You should go validate all of this for yourself. And if you want to do that, we have a tool to help you along that path. You can go download all the data I used for this analysis. The link is in the description below if you want to check that out. All right, that's what I got for you guys. For BiggerPockets, I'm Dave Meyer. Thanks for watching.